Good weekend all. Ira Epstein with your SPDR ETF wrap-up, and this is your weekend edition. We're not open on Good Friday, and I want to wish you all a happy Easter and all those things that go along with that. But the markets won't be open tomorrow. They will in the futures. They are in a number of them right now, and they'll trade until the morning, and then they have abbreviated hours as well. Now, as you know, I came out with my online enhanced Bollinger Band course, things that I doubt that most people have ever seen about Bollinger Bands that I've learned over the years and apply. Today we got a trade off of that in a couple of areas, in fact, and we'll see what happens. But one of them was in the Dow on the upside, and we'll see what goes on there. If you want to learn about the course, just take a look at it. I've created a video for you to study. Go to www.iraepstein.com under the word education. Pretty simple. Okay, so as we look behind me, we can see it was mostly a green day. Now the market is expecting the jobs data that does come out tomorrow. It's a crazy holiday. Certain things open, certain things close. Government's going to release the jobs data, and they are looking for near 1 million jobs to be added. So a big number. We'll see if that adds fuel to the fire. What else is going on? This is the first day of a new quarter. Money gets deployed. Take a look behind me. You don't have to believe me, but that's what goes on. It needs a home, and it's generally on the buy side. You don't bring the money in on the sell side. You bring it in on the buy side, and you get that initial push on the market. Now, you might have even gotten more of that today than normal as people wanted to get their books open, what the positions they want for the longer holiday weekend. When we look at the tech sector, I like the action today. We've got higher lows now and higher highs. So this correction that began back here has now run its course to a degree. Remember, this is a weekly chart. So this correction began from this peak on February 19th and has now changed itself into an uptrend. So we'll see if you get back under 127.72 would be a false move to the upside. You're over the 18-week average of closes, and that's where you fought this battle. So if it's going to go up, where might it go? Well, I'll be looking at the upper Bollinger Band at 138.11 as the first target. I don't want to see prices back under 127.72. I expect the pros are defending long positions at 130.91, and momentum is turned. So I've got momentum up, bias up, trend up. When I come to PAVE, this is one of my favorites right now. It was up for the week here, 0.27. Where's it resistance point? Look at the upper Bollinger Band. If you don't see that, should I come over and knock you on the head? It's right there. This is why those Bollinger Band, the enhanced course, teaches you a lot about this. You have an embedded reading. Nothing has changed. This market trend still looks to me very much in an upslide until the red line closes back under 79. When I go to XLI, I have an embedded reading. Right off the bat, I'm bullish. What about the momentum? It's up. Where's the market running? On the upper Bollinger Band. Again, the course teaches all about this. XLE, you lost the embedded reading. Be careful. Now, how much did you lose it by? You're under 79. Unless it picks itself up this coming week, because this is a weekly chart with the close back over 80, the odds favor that price and the what average? Not necessarily the 18, could be the 100. It's the closest moving average it goes back to, and the word is back to. So it'd be a retest of that number. I don't consider hitting it last week, right here. Did you lose the embedded reading? No. So you'd have to go back to it to hit it now. If you slide through there, then the 18-week average becomes the next support factor. It's interesting that it was down because OPEC did a great deal today. They're bringing back oil in a very, very structured basis. You'll need until the summer to get back to about 1 million barrels a day. They're going to do roughly, it'll go between 300,000 here and there, and then the Saudis bringing on their own barrels. So we'll see what goes on through there. SPY, do we have the embedded reading again? Well, if you take a look this week, you were up with it. Last week, the week before, certainly. You're fully embedded. You have an embedded reading. The market has given pullbacks to be buyer on. The first resistance point, $4.61, and you got this week to 467. So that was where I think the pros again took money off the table, and I don't think they're through with this market. I'm still looking for them to buy until that red line closes back under 79. We'll see what happens. EFA, are we trying to embed here? Embed means you've taken a market in the slow stochastic out of an overbought condition, and it locks in where the numbers stay over 80 for at least 3 weeks in a row. You don't have it. This is an overbought market that's in an uptrend. Resistance is above the market at 77.89. GLD, the market is oversold or not? Well, both numbers were over this week, 20, under 20 last week. You tell me. It's been embedded. So in order to say this market's going to turn up, you got to get a close this week over 21 on the red line. That would tell me that then price is ready to move. If you clear 164.15 in the process, you might even be saying you're going to go back towards this 18-week average. The bears are still in control, but they're not just ignoring it. They see where the profit objective is, again, that Bollinger Band. GDX, the 100-day average is the battleground with the lower Bollinger Band. You turned away, you're oversold. You are not in a downtrend in terms of the slow stochastic, but you are in terms of the swing line. In order to turn the trend up, and yes, the word is up, all you need to do is hit 34.48, which means the bears are going to try to stop that by looking at that 34.34, the 18-week average, and that'll be the resistance, I think. SLV, if you take a look at this week's low, 22.13. The Bollinger Band, 22.13. Now, your Bollinger Bands should look just like mine. Your slow stochastics won't, but in my slow stochastic course, I'll teach you how to make them look that way. Lower highs, lower lows. Take a look right here at 23.92. That is a resistance point, but I don't think you're going to attract the pros into selling the market there until you're out of the oversold condition. TLT, this is a nice bounce, but nothing's changed on this chart. It's still fully embedded, which means bearish. That's going to rule the day. I don't care what it does here. We picked that the 200-day average was likely going to be the first major support point. The 100 didn't act like any support. It just went through it like that. Here's your battleground. Get a close over 21. I think you can get more of a rally, maybe up to there. Don't get it, and there's another leg possibly to the downside coming. In FXE now, if you take a look, the market got down to the 200-week average in the lower Bollinger Band in an oversold condition. I think the pros did a lot of short covering on this right now. So I want to wish you all a happy holiday. I'll see everybody when we get back, and that'll be Monday. Take care.